Hello, you're welcome again as we look into the entry models number 2. So it is called demand and supply confirmation. All right, the demand of supply confirmation in pictorial representation is all about understanding your candlestick formation. What this is, for example, when you talk about demand, that's you maybe market was selling and the market is trying to buy, okay? Or market is already buying and then price just come down to a particular demand point and continue to buy. So how do you understand that? How can you spot which of those pullback do you want to buy from? For easy understanding, let's look at our candlestick formation again. First thing first, we know our first candlestick, second candlestick, and third candlestick. This type of candlestick formation is called morning star candlestick pattern. You would have known this already from the trading candlestick bible and also from the previous model I've explained, morning star candlestick pattern. Okay, now we know that this is the first candlestick. The second candlestick, the wick is usually longer than the first candlestick downward. Then the third candlestick, the wick is above the second candlestick, while the body of the third candlestick will be closed above the high point of candlestick number 2. All right, so this is our morning star candlestick pattern. Then that is for demand. We now know that number 2, the high and low points of number 2 is going to be called what? Our demand. The pictorial representation is this: when price is selling down, up, down, up, down, then it now went up again. Then by the time price went up, this low point is our support, right, from our previous studies. Then if we have this type of candlestick formation at the low point where support is, that is going to become our what? Our demand. Yes, so let's continue. That is when we are buying the market. When the market is going up, that's what we talk about demand. Now when market is coming down, that's not what we then talk about supply. And supply is when price give us similar something like this type of candlestick formation. Okay, this type of candlestick formation where price is giving us candlestick 1, candlestick 2, then candlestick 3. When we look to the left hand side of candlestick 1, the wick is below the wick of candlestick 2. Then candlestick 3, the wick is also below the wick of candlestick 2. Then for us to enter the signal, we will then have to take the high point and the low point of candlestick 2. That will be our entry to go along the trade. I'm just trying to explain demand and supply here. Now we know this pictorial representation where price is making uptrend, downtrend, uptrend, downtrend, uptrend. Then price came down. Probably while price was coming down, price can give us a supply there, and that supply, how do we know it's a supply? That's when we have this type of candlestick formation in that area. Now mind you, the market is very cunning and it will not show you most of the time it will not show you perfect morning star candlestick at your demand level. It will not also show you perfect evening star candlestick at your supply level. Okay, this is just like an understanding where you move from one stage to another, but the principle remains the same, whereby the first candlestick, if you are selling in a supply, the first candlestick must be low, the wick and the body must be lower than the middle candlestick. Then the third one must be also lower than the middle candlestick, while the body of the third candle we have to close below that of the middle candlestick. Hope you get it. That's just the principle, but the candlestick formations may not be the same. So the like number 1 candlestick, the body can be small, can be smaller than this, can be half, can even be the same size as candlestick 1 and 2, but the wick must follow that rule. Okay, so let's go. Now, based on the fact that the candlestick is not always in the right, cannot always give you the same type of candlestick formations, but the rule is the same everywhere you go. This is why we have to understand this particular scenario, recall for our candlestick study in the videos for price action, where we talk about Erami, bullish Erami. And bullish Erami is like a pregnant woman. Let's say this is the body of the woman, the back side, right? Then this is the tummy, the protruding tummy that is having the baby. Okay, so that is bullish Erami. Very understandable. It can be used alone in the market, but we are not trying to just make some random decision. We want to follow principles in our trading. So now this is for this side. Then when price is giving us a demand zone, at that demand zone there may be situation whereby first thing first, what we'll note is what this is what we call bullish engulfing candlestick. This first candlestick, right? Sorry, this candlestick 2 and 3. Then where is going to be our candlestick 1? This is not our candlestick 1. Okay, and you can see in the formation of between this candlestick 1 is what we call our bullish Arami. All these things, they don't happen all the time. It's just for your understanding. Okay, our major focus is this particular one. So the two major candlestick that we need is number 2 and number 3 candlestick, but we also need number 1 candlestick for one thing only, which is the number 1 candlestick. The wick must be up. That's when we are in the demand zone. Then the number 2 candlestick must be the lowest wick for number 1 and number 3. Then the other function of number 3 is what? Is to be above, is to close above the entire number 2 candlestick. I know this might be looking difficult, but if you watch these videos over and over again, you understand what I'm trying to talk about, and you can easily understand. It's very simple. Okay, now that's for demand zone. And the purpose of this particular formation, where we have bullish engulfing candle, which is this one in this red box here, and then we also have a formation of a with inside bar false breakout. Now whenever price take out a bullish rami, okay, with a particular formation like this, first candle, this candlestick that I marked here, this particular candlestick, if you remember our candlestick formation, this is called an hammer candlestick. An hammer usually happen in a downtrend, okay, and then when it happens in a downtrend, we want to see what price will continue to do and go up, making an uptrend, right? That is okay. Now the other thing there is this bullish Arami, the hammer took it out. Then for more confirmation, we now have this number 3 candlestick closing above candlestick number 2, meeting all our demand. So if we have this type of formation that is here, it is going to give us an A++ setup with more confidence that if we play this trade, it's going to play out beautifully. The same thing applies for the supply, which is the downside, bearish Arami. This formation, the number 1 candlestick is very big, number 2 candlestick is like half of the number 1 candlestick. Then we will now have this type of formation also, where we have bearish Arami. We have this one, this candlestick is shooting star, taking out the high point, the wick of the bearish Arami. And this three formation alone is called what? False inside bar false breakout. Okay, but we don't have to cram all those things. You just have to see it and probably know it. Our major focus is this red box, where price is what? This middle candlestick. Take out the previous candlestick wick, and then the third candlestick now will be what? We have a close below the number 2 candlestick, and then this is going to be our signal to enter the trade. Now let's go to the signal, how to apply the signal on the main chart. So how do you apply this particular demand and supply information on the main chart? Let's first of all look at it as demand and supply confirmation entry. There's what we call aggressive entry, whereby maybe when you see this type of formation in the market, you say, okay, this is demand zone, just enter it. And sometimes you see price will just come and take you out in stop loss. But if you can be patient and wait for confirmation, you are going to save yourself a lot of losses, and more confidence to take good trades. Now, when price tap into a demand or supply zone, and any of the candlestick pattern as shown, previously, when none of those candlestick pattern, when you talk about morning star, talking about morning star candlestick pattern, evening star candlestick pattern, probably this type of pattern also, talking about this particular medial focus, our bullish engulfing or bearish engulfing candlestick. When any of those things happened, entry will be made with the new candlestick pattern. Okay, now this is conservative entry and very effective. And what the English I'm talking there is, first of all, we know that this is our demand zone. Price has given us a morning star candlestick pattern there. Then we are not supposed to enter this trade directly and say, okay, because this formation is here, this is demand zone, we just want to buy. No, we are going to wait. Price has come down, right? This is a downtrend. For example, price has come down, give us this particular formation. We want price to go up again. Then when price is coming down, price can give us another formation. The other formation is not another morning star. That's in this situation where we are buying another morning star candlestick pattern. So this particular morning star candlestick pattern, label number 2, this is our confirmation that yes, this first demand zone is going to hold, is going to give us more winning, which is, it will boost our confidence. Then it is this number 2 now, we now have to enter our trade and place our entry. And you can see price will just come, tap into it and continue to buy. Whereby we put our stop loss at the low point here. Our entry is here. Our stop loss just below the wick of the number 2 candlestick. This is our number 1 candlestick, number 2 candlestick, number 3. It has met our condition of trading. We just place the trade and with confidence it will play out. Now let's look at the selling aspect when price is in a downtrend. Okay, now maybe when price was in the uptrend, now price has changed trend to downtrend, and during that process where price was coming to downtrend, is left behind what? An order block. It left behind a supply zone, and that supply zone, we can call this our evening star candlestick pattern. Then what do we do? Because it has met all our condition, candlestick 1, the wick is below, the middle candlestick, the wick is very up, the third candlestick, the wick is below, then the third candlestick, the body also closed below. This is just what we're repeating itself in the market. Now we want price to come back into that zone, okay, into this zone now. And while price is coming to it, price can give us this our morning star, evening star candlestick pattern again, and our middle focus is going to be on this middle candlestick that is going to form, and we expect price to come and tap into it and continue to sell in this scenario. So all these things, you understand it more better with practice and practice and practice. Now there are sometimes it may not be morning star candlestick pattern, it may not be evening star candlestick pattern. Sometimes it may just be bullish engulfing candlestick, or it may be the formation of this particular combination of entries where we have Arami, we now have Ama, then we have this other candlestick going above it where we now have bullish engulfing or bearish engulfing. All these things are just more confirmation to enter the trade. So let's go to some examples to cement this information. Now let's take an example on step index. All these indices. We have crash index 500 there. Then when you zoom in, coming to our pullback, like in our first video, we talk about major pullback. Now talk about minor pullback. Price is making minor pullback, you see, until the major low point is taken. This is our lower low, our lower high, all those things. Then we want price to come to that and give us our entry. By the time we zoom in, we see that price has come to that place and give us our entry. And look at this entry, this particular entry. What candlestick formation is this? Let's look at it. This is what the candlestick that touch our resistance. Now this is what happened in this particular situation, whereby this is our what? Price went up automatically. This is our low point, our support. then price came down. It did not respect the support. It just broke through it. Automatically, this support now is now our what? Our resistance. And as such, we want price to come back to it and give us our candlestick formation. See what price did here. Price gave us 2 make confirmations before it went downward. Sorry, the 2 make confirmation is this. First thing first, price, the wick that touched this particular resistance now is now what? This is our first confirmation. Price touch it, then that is automatically our middle candlestick number 2. Then look at number 3 candlestick. The following candlestick, the wick is below it, and as such, when the wick is below the wick of number 1, so wick is below. Look at the left hand side, wick is also below. Then the third candlestick, you can see that the body closed below that of the middle candlestick. Then I can also see another thing there. This is what, look at this formation. This is automatically our what? Our bearish arami. If you can remember from our video, I hope you can see it now. This is what? Bearish arami. Hope you remember. What make up a bearish arami, whereby the first candlestick is the bigger one, the following candlestick will be very small. Okay, now let's go back to our example. You can see it that this is our candlestick giving us our bearish arami, and then this is another what? Entry confirmation, the major focus. Then what we want price to do is that when price come into tap into this particular angle, we want price to do what? To give us our entry model, and this is one of them. You see, price did not actually tap into this particular entry. So when price don't tap into it, this is another block. Okay, this is a demand zone now. This is a demand zone. So when price came, give us and tap into this particular demand zone, and then what do we expect? We want our bearish engulfing candlestick, or this is number 1 candlestick, number 1 candlestick, number 2, and number 3. Number 3 candlestick met all our criteria. Then we cannot take this trade with very good confidence. Why? Because this is the first candlestick. Sorry, this is the first supply zone. The market is selling now, so this is the first supply zone to your left. Then we not just enter this trade and say, okay, this is a supply zone, I want to sell directly. No, we have to wait. When we wait, price tap into it and give us our what? Our evening star candlestick pattern. Then we cannot sell directly from here. Place our buy our stop loss at the top, and then make our target. Then look at what price did again. Price also tap into it, giving us our what? The third candlestick, which is this one, number 1 candlestick, number 2 candlestick, number 3 candlestick. Okay, so our major focus is this particular number 2 candlestick. This might be getting somehow complicated. Why? Because if you look at it, this particular number 2 candlestick, the next candlestick did not close below it. It was the third candlestick that closed below it. So I will try to link a video about understanding candlestick, other block like supply or demand, when you use the lens of smart money concept to try to understand it. I will make a link down below. You can try to watch it, but that might be confusing right now. As time goes on, you understand what I'm talking about. Let's come to the very obvious one. Now, this is a demand, a supply zone. What happened now? When price came into the supply zone, you can see what price did next. Price also tap into it and give us our what? Our 3 candlestick formation. What is the first confirmation? The middle candlestick is number 2, right? Number 2 candlestick, number 1 candlestick, number 3 candlestick. Then we can now draw our line that the up and down point of number 2 will automatically be our entry. So this type of trade, you don't have to wait for more confirmation, whereby the first confirmation is price has tapped into the first supply zone. Then the second reason to enter this trade, price has not given us our evening star candlestick pattern. Then we can use this number 2 to enter the trade correctly. You can see that was a very successful trade, and the same thing also happened for the bullish situation, that is when price is buying. Now you can see what is happening here. price was in a downtrend, selling. Then price went up, give us internal pullback, and then came again into this demand zone. Okay, let me zoom in. You can see this demand zone left behind what this 3 candlestick is called what? A morning star candlestick formation. Then we cannot just enter it directly and say, okay, we want to buy. We just want to buy. No, we have to wait for price to come into it and see if it's going to give us our confirmation by giving us another morning star candlestick pattern. You can see it. That's what happened there. Then, and this met all our criteria whereby, the first candlestick, number 2 candlestick, number 3 candlestick, number 1 candlestick, the wick is up. Number 2 candlestick is the lowest wick there. Number 3 candlestick, the wick is up. Then the body of number 3 candlesticks close above the whole body of number 2 candlestick. So with this, you can now say, okay, we have to enter this trade now directly with confidence because it has met all our criteria. You can see this trade. See how the trade play out beautifully. First one was met. We wait for confirmation. Our confirmation entry is this. Price just came back down, tap into it and continue to buy. I hope you understand it very well. We have explained for the demand, for the supply zone, and also for the demand zone. Now let's make one more example. Okay, see another example here. What's happening here? This is, market is making downtrend. Okay, market is making downtrend. You can see that as market is making downtrend, market have to come back into this supply zone that have been left behind. When price come into the supply zone, we cannot just sell here because we don't have any reason to sell here. This is just an ordinary supply zone. The 21 moving average did not give us entry. There's no maybe support turn to resistance. Nothing happened there, but this is just an ordinary supply zone. So we cannot just say, okay, because this is supply zone, we want to now say directly. No, we have to wait for confirmation. And when confirmation came, is when price tap into it and give us our evening star candlestick pattern. You can see it. You can see the candlestick formation. That this is the main candlestick that tap into it. Candlestick number 2. Then we have to look to our left. You see the next candlestick, the previous candlestick before the one that tap into this zone. The wick is below the wick of the number 2. The number 3 wick is also below. Then we want number 3 candlestick to do what? To close below the entire body of number 2. This will not give us our entry. Confidently, we cannot take this trade. And you see that when I did, it gave me a very nice 1 to 3 trade. This is a good trade that will give you confidence to trade without hesitating. Okay, now let's go to the last example. Now look at this example. You see what price is doing. Price is making bullish move, came up, came down. Then when price was coming down, price has not changed trend. Price left behind what? A supply zone. So look at it. There's no reason for me to say, okay, I want to enter this trade because first thing first, price did not give me break and retest, like maybe supply turning to resistance. Then in this situation too, the 21 moving average was not here. Okay, so there's no need for me to enter this trade, but I can wait for confirmation and see if this is going to give me my entry criteria using demand or supply zone confirmation. So in this situation, this is my supply zone. I'm waiting. Price came into it, give me number 2 candlestick, and you can see the first candlestick is the wick is below the other candlestick. The middle candlestick, the wick is above the highest wick there. Number 3 candlestick, sorry, this is number 3 candlestick. Let me zoom in. Number 3 candlestick, the wick is below the wick of the middle candlestick. Then number 3 candlestick, then close with body below the middle candlestick. When that happened, this will give me confidence to enter my trade. And then when I did, you see what happened. This is a very nice trade of 1 to 3. There are a lot of examples that I can show you when this play out very, very, very well. And this type of trade will boost your confidence to have a very good result and outcome. So all you have to do is to practice this. Look at your chart, go and mark it out on your 4-hour time frame or any time frame that you like. Mark them out and you'll begin to see what price is saying. Then you can trade confidently and be profitable. Okay, thank you.